Ryan Sheppard here, partner with Knight Riley Sheppard CPAs in Fairfield, Connecticut. With the election coming up right around the corner, I wanted to take this opportunity to talk a little bit about the tax plans for the respective candidates and where that stands. So most importantly, the pocketbook issues that we often talk about. So the tax code is often a political football for the respective parties, as you know. So, the tax code is changing constantly. The politicians often drive policy through tax code. So what I'm going to talk about today is some of the differences between Trump and Biden with respect to the current tax law and where they expect to be if Trump gets reelected and also if Biden gets elected. So let's start off with tax rates. So the tax system is comprised of a progressive system, meaning that the first bucket of money is taxed at this percent, the next bucket is taxed at this percent, so on and so forth, until it progresses to the highest level of 37%, where it is today under President Trump. With regard to his plan, if reelected, he is considering another 10% middle-class tax cut. When Trump tax reform came in a couple of years ago, we had 7 tax brackets. All 7 of them were reduced. So it went from, here to now here. So he's talking about another 10% cut to middle class. Joe Biden is talking about increasing the top rate to 39.6%. He has not made any comments about the other rates in particular. He's just talked about not raising taxes on those making less than 400,000. So anyone over 400,000, it seems to be, from what I can tell, that he wants to increase the top rate to 39.6%, which is what it was under President Obama. Capital gains rates. So what I'm going to talk about here is long-term capital gain rates. So capital gains, they're broken down between short-term and long-term. Short-term is a year or less. Long-term is over a year. Currently, short-term is taxed at your ordinary rates, whatever your marginal rate might be at that time. And long-term is taxed at a top rate of 20% plus another 3.8% of net investment income tax. So all in, you're talking about a 23.8% long-term capital gain rate as it stands today. Under Biden, so that's where it stands today, and Trump, the only thing he said about it is that he would cut maximum capital gain rates to 15% if reelected. Biden has said that if your top ordinary, if your total income is over $1 million, he's going to raise that long-term capital gain rate to 39.6. So you're talking about, let's say someone making $1.5 million today, your capital gain rate today for long-term is at 23.8%. Under Biden plan, your long-term capital gain rate will be 39.6% plus the 2.3 that I was talking about earlier. So that's effectively a 42% tax rate versus where it is today. So 42% versus 23%, you're talking about a 19 percentage point swing on long-term capital gain rates under Joe Biden's plan. So itemized deductions. So this is important for obviously those who own a home and pay taxes. Itemized deductions under the current plan, there's currently no limitation other than the state and local income tax deduction cap of $10,000. Under Biden, he's talking about a cap on itemized deductions in total. That's the way it was under the Obama administration too, indirectly. Just because of the phase outs. So there will be a cap under a Joe Biden tax plan. Social Security taxes. So this is a big one, not discussed enough, I don't think. Under current law, Social Security tax and Medicare tax is, or Social Security tax rather, is capped at $137,000 per person. So when you get a paycheck, you have Social Security taxes of 6.2% coming out. Your employer is paying the other 6.2%. but that is capped at $137,000 in salary right now. And then, so once you hit that number, that 6.2 sort of stops. That's your Social Security contribution. And that's the way the law is today. So what Biden wants to do is actually lift that cap for those making more than $400,000. So if you make $450,000, for example, now you're talking about $300,000 additionally being taxed at another, 6.2% if you're an employee. That's pretty substantial. And if you're self-employed, by the way, you got both sides of that. So not only are you paying the 6.2%, you're paying 12.4%. So if you're self-employed or you have a pass-through company, it's not hard for you to get over $400,000. So that's quite a hit, to those that are self-employed or have pass-through companies, with employees and that kind of thing. That is a substantial tax increase with way more of an impact than just the marginal rate increase that I talked about earlier, the 37% going from that to 39.6. So in this particular case, you're talking about, a huge hit for those business owners. It's not going to be so nice. So, just be aware of that. And it actually gets a little bit worse. I'm going to talk about that later. But that Social Security hit is pretty substantial. Corporate tax rates. So these are more like C corporations, that kind of thing. The current law is 21%, as you may remember, as part of Trump tax reform that was reduced from 35%. It's now 21%. Joe Biden is talking about doing a 28% corporate tax rate. Depreciation expense. So for those business owners that are out there buying equipment and furniture and fixtures and all that good stuff, you have a pretty friendly environment right now. So that kind of stuff you can accelerate and write off as these things are expended, which is nice. Biden has not announced a specific plan with regard to depreciation yet. So we're not quite sure exactly where he'll fall on that scale. There was some limitations under the Obama administration. So, we can guess and hypothesize that, my sense is there would probably be some limitation to go back to old rules under that. So qualified business income deduction. This one is for small business, self-employed, those that are involved in partnerships or S corporations. So remember what I talked about earlier with the Social Security earnings. So if you're a small business, and let's just say you net $500,000, and as a small business, we're not talking about a multi-million-dollar corporation here. So if you're at $500,000, right, now you've got the additional 12% Social Security tax from the additional Social Security cap limitation that I talked about earlier. So you've now got an additional 12% there. And with the qualified business income tax deduction, so under current law, $500,000, let's say, and I'll just keep it simple, that under qualified business income tax deduction, if $500,000 is your net, and then some other rules in there, you can effectively get a 20% deduction from the $500,000. So that's a $100,000 tax deduction to you off the $500,000. And that's not money you have to spend. That's just part of Trump tax reform that reduces your taxable income by $100,000 in that example. Well, under Joe Biden policy, that deduction would only be allowed to those businesses at $400,000 or less. Now, so let's think about that. You have a $100,000 deduction that you would no longer get in that example. That $100,000 deduction, call it $30,000 in real money that you're saving. Now, combine that with the 12% of the Social Security that you have to pay because you're over 400,000 earlier because there's no cap. So we're going to take 400,000 at 12%. That's another $49,000. So I've lost $49,000 on the Social Security cap if you're a small business owner. And then I've lost another $30,000 from losing the qualified business income tax deduction. These are substantial numbers. So it's mostly small business stuff that are going to get hit under this particular plan. Now, I should qualify this a little bit in that, sometimes when you talk about presidential tax policies, how much of this stuff actually gets implemented. It's hard to say, and there's probably studies out there that talk about it, but a lot of it will really depend upon who controls Congress. And, if the Democrats, I'm not trying to be political here, but if the Democrats take the House, the Senate, and the presidency, 100% there's going to be tax increase. What it's going to look like, is it going to look exactly like this? Don't know. I don't know how much of this has been vetted out by his folks. But there's no question there will be an increase. It's just a matter of how much, what that's going to look like. Right now, if you look at it, if you're a small business or a pass-through company or something like that, it can be devastating if you're over that $400,000. If you're under the $400,000, it's not going to look a lot different than where it is today. But if you're over that, again, a small business who has to report income from profits of the company, whether you took them out or not, you're going to get hit pretty hard, assuming all of this stuff flies. So what can happen though, even if the Democrats take all three, there are lobbying efforts that hopefully can try to reduce some of this, but in the end, hopefully you have a better understanding of the differences in the tax law related to these issues. Anything can happen, as you know, so we will see, but that is where things stand today.